Welcome back to the deep dive. Today we're going to be looking at the AMFI Crisil Factbook 2024.
Sounds good.
We're going to be diving into the world of mutual funds in India.
Okay.
A lot of people want to know what's going on with this market, and we're going to try to unpack all the latest trends and data for you.
Yeah.
And what it all means for you and your own investments,
Yeah.
for example.
Mhm.
Did you know that women are now a major force in Indian mutual funds?
Wow.
And that people are holding on to their investments for way longer than they used to?
Interesting.
I'm really excited to dive into all this, and I've got our expert here to help us break it all down.
Happy to help.
So let's get started.
Okay.
This fact book is really pretty interesting because it paints a picture of India as one of the fastest growing economies in the world.
Right.
Even with all the instability in the world right now.
Yeah.
They're projecting a GDP growth rate of 6.5% for fiscal year 2025. But here's the thing that I thought was interesting. India's gross domestic savings rate is higher than the global average.
Yeah.
So how do we connect economic growth and savings rates to the mutual fund boom?
Well, higher GDP growth usually means higher household incomes, which translates to more money for savings and investments.
Yeah.
And what we're seeing in India is that people are moving away from traditional bank deposits and choosing to put more of that savings into mutual funds.
Interesting.
In fact, over the last 5 years, the growth of mutual fund assets has actually outpaced the growth of bank deposits.
That is really interesting. That's a pretty significant shift.
It is.
It seems like people in India really have an appetite for these mutual funds.
It seems so.
Just how big is this wave?
Well, we've seen a 9-fold increase in assets under management.
9-fold.
9-fold.
Wow.
Or AUM.
Okay.
In less than 2 decades.
Wow.
Back in 2008, the AUM was under 6 lakh crore.
Okay.
But now in 2024, it's over euro 53 lakh crore.
Wow. That's incredible.
Yeah.
A 9-fold increase? So it's not just a rising tide lifting all boats.
No.
It seems like people are choosing to steer their boats towards mutual funds?
Right.
Why is that?
Well,
What's driving all this growth?
there are a lot of factors at play here.
Okay.
But one of the biggest is retail participation.
Okay.
More and more, everyday people are choosing to invest in mutual funds.
Interesting.
We've also seen a digital revolution in India with all these online platforms making investing very accessible,
Yeah.
especially for younger people.
Yeah, that makes sense.
And this has been coupled with a surge in financial awareness.
Yeah.
People are realizing that mutual funds are a smart way to grow their wealth.
So a perfect storm of positive factors.
You could say that.
Creating a real cultural shift
Yeah.
in how people are approaching investing.
Right.
But is this just happening in India, or is this a global phenomenon?
Well, the Indian mutual fund industry has actually been outpacing global growth.
Interesting.
The compound annual growth rate, or CGR,
Okay.
of net assets of open-ended funds in India has been much higher
Then.
than the global average.
Okay.
This suggests that India is creating its own momentum
Okay.
and not just riding a global wave.
So we've established that mutual funds in India are experiencing this incredible growth spurt.
Yeah.
But I'm curious, where are investors putting their money? Are there particular categories that are standing out?
Yeah, one fascinating thing we're seeing is the rise of equity funds
Okay.
and passive funds.
Okay.
They're attracting a lot of attention. For example,
Okay.
the passive fund category's AUM has increased 5 times
Wow.
in just the last 5 years,
Okay.
exceeding the growth rates of other categories
That's a lot.
by a lot.
That's interesting. I've been hearing a lot about passive investing lately,
Yeah.
especially index funds and ETFs. So what's the appeal there?
Well,
And is this something that our listeners should be considering?
passive funds try to mirror the performance of specific market indices
Okay.
rather than trying to beat them.
Okay.
This tends to be more cost-effective
Okay.
because you don't have to actively pick stocks or trade very often. So, yes,
Yeah.
I think it's definitely worth exploring,
Okay.
especially for someone who's looking for a low-cost and efficient way to diversify their portfolio.
Yeah, that makes sense. Aligning your investment strategy with your goals and your risk tolerance.
Exactly.
Now, the fact book also mentions something called SIF,
Right.
or systematic investment plans.
Yes,
They seem to be very popular in India.
they are.
Can you explain what they are?
You can think of a SSP as a disciplined savings plan
Okay.
for mutual funds.
Okay.
You just decide on a fixed amount
Okay.
that you're comfortable investing,
Mm-hmm.
and then that amount gets deducted automatically from your bank account at regular intervals.
Okay.
Let's say monthly.
Okay.
And it gets invested into your chosen mutual fund scheme.
Gotcha.
So not only does this help you build a regular savings habit,
Yeah.
but it also averages out the cost of your investment over time.
Right.
Yeah.
That's what we call rupee cost averaging.
Exactly.
You buy more units when the market's down and fewer when it's up,
Right.
which smooths out the volatility.
Yeah.
The Factbook states that there's been a 6-fold increase
Wow.
in monthly SIP contributions since 2016.
Really?
So people aren't just getting into mutual funds.
Yeah.
They're committing to a regular investment plan,
That's a pretty significant shift.
which is a big shift in behavior.
It is.
Yeah.
It really shows a move away from trying to time the market
Yeah.
to a more long-term and disciplined approach.
Yeah.
And this is reflected in another interesting trend that we're seeing.
Okay.
Investors are holding onto their investments longer than ever.
That's fascinating. So we're seeing investors become more committed to regular investing,
Right.
but they're also becoming more patient.
Yes.
Do you think this is tied to the rise of SIPs?
I think SIPs definitely play a role.
Okay.
When you commit to a regular investment plan like that,
Yeah.
you're less likely to react emotionally to those short-term market fluctuations.
Right.
SIPs encourage a long-term mindset,
Yeah.
which can lead to better outcomes.
That's great.
And the data supports that.
Okay.
The percentage of assets under management
Mm-hmm.
held for over 5 years has more than doubled between 2019 and 2024.
Wow. That's a really big increase.
It is.
So it seems like those days of panic selling are fading away.
It seems that way.
Investors are starting to understand that volatility is normal
Right.
and that long-term gains
Mm-hmm.
often require weathering those short-term storms.
Yeah.
Now, this fact book also sheds some light on another interesting trend,
Okay.
the rise of direct plans. So can you explain the difference between direct plans and regular plans?
Sure.
And why are we seeing this shift?
Well, direct plans let you invest directly with the mutual fund company,
Okay.
which means you cut out the middleman,
Okay.
the distributor or advisor,
Okay.
which means lower expense ratios,
Okay.
potentially higher returns,
Okay.
and you get greater control over your investments.
So it's a more hands-on and cost-effective approach.
It is.
But the fact book also points out that regular plans still hold the majority share,
Right.
particularly with retail investors.
Yeah.
So it seems like a lot of people still value that guidance
Yeah.
and personalized advice that comes with a financial advisor,
Right.
even if it means paying a bit more
Yeah.
in fees.
It's a trade-off,
Yeah.
cost versus personalized service.
Yeah, it's about finding that right balance
Exactly.
for your needs.
There's no one-size-fits-all answer.
Yeah.
Some investors are comfortable navigating the world of mutual funds on their own.
Mm-hmm.
And they want the control and the cost savings that come with direct plans.
Yeah.
While others
Yeah.
really want that expert guidance and peace of mind
Yeah.
that comes with the regular plans.
Yeah. So it's all about
Mhm.
choosing the path that aligns with your needs.
Exactly.
Now, one of the trends that really caught my eye in this fact book
Okay.
is the rise of women investors in India.
Yeah.
The data is really compelling.
It is. It really is.
So tell me about that.
Well, AUM from women investors has more than doubled
Wow.
in just the past 5 years,
Okay.
which shows a growing interest from women in the world of investment.
Yeah, it's not just about the number of women investors. It's also about how much they're investing.
Exactly.
The fact book points out that the average folio size for women
Yeah,
is actually growing faster than men,
it is.
meaning they're investing larger sums.
It seems that women aren't just dipping their toes in the water.
Right.
They're diving right in,
They are.
demonstrating a growing confidence in their financial decision-making and a commitment to building wealth.
That's great. This is really fascinating.
Yeah.
The fact book actually says that 1 out of every 4 unique investors is a woman.
Wow.
So what's driving all of this?
Well, financial literacy is definitely a contributing factor.
Okay.
More women are becoming financially savvy
Mm-hmm.
and are looking for ways to grow their wealth.
Right.
But there are also some broader societal shifts happening in India.
Okay.
Female labor force participation is on the rise,
Yeah.
meaning more women are earning their own money,
Mm-hmm.
and they have more control over their finances.
Right.
So this is empowering them to make their own investment decisions and take charge of their financial futures.
So it's really inspiring to see
It is.
the investment landscape becoming more diverse and inclusive, which is a positive sign.
It is.
For the industry's growth.
Definitely.
And innovation.
Yeah.
Now, another interesting trend that this Factbook points out is the expansion of the mutual fund industry beyond the big cities.
Yeah.
It seems like mutual fund investing is reaching new shores.
It is.
Yeah.
It is.
So tell me about that.
Well, the AUM share of cities beyond the top 15 has been steadily increasing.
Interesting.
Indicating a growing interest from investors in smaller towns and cities.
This is a pretty big shift.
It is.
From the traditional view that mutual fund investing is an urban thing.
Yeah.
What's driving this expansion beyond the metros?
Well, one key factor is the increasing accessibility of digital platforms.
Yeah.
With internet penetration reaching even remote areas. Investors in smaller towns now have easy access to information, research, and online investment platforms.
Right.
They can explore their options.
Yeah.
Compare features and fees.
Yeah.
And make investments all from home.
That's great.
Or the office.
So technology is really key here.
It really is.
It's breaking down those geographical barriers. And it's democratizing access to investment opportunities.
It's about leveling the playing field and empowering investors all across the country, regardless of where they live.
That's fantastic. Now, the Factbook also mentions a declining AUM share of the top 5 states. Maharashtra, New Delhi, Karnataka, Gujarat, and West Bengal. Is this just a case of other states catching up?
It's more than just catching up. It shows a broader trend of diversification and expansion within the industry. As awareness about mutual fund spreads and access to these investment opportunities improves. Investors in other states are becoming much more active.
So the investor base is becoming more geographically diverse.
It is. And that's a good sign for the industry's long-term health and growth. It reduces our reliance on a few key markets. And it creates a much more balanced and resilient ecosystem.
That makes a lot of sense.
Yeah.
Now, the Factbook dedicates a whole section to digitalization, calling it a game changer. And the numbers really back that up. So tell me about that.
Nearly 90%
Wow.
of mutual fund purchase transactions in fiscal year 2024 were done through digital channels. A massive shift in how investors are interacting with the market.
That is a huge percentage.
It is.
So what's driving?
Well, one major driver is the increasing penetration of smartphones and the internet all across India. More people than ever have access to the internet. And they're using their smartphones to manage their finances, including their investments.
So convenience and accessibility
are
really key.
Digital platforms let investors transact from anywhere at any time. No need to visit a branch or rely on traditional paperwork.
And not only is it more convenient, it's also often cheaper than going through traditional channels. Yeah, digital platforms often have lower operating costs, which means lower fees for investors. And that can make a big difference in your returns over the long term. So it's a win-win.
It is. More convenience, lower costs, and potentially higher returns.
It's no wonder that digitalization is transforming the investment landscape.
It is. It really is. It's a powerful force that's shaping the future of this industry. And it's not just about buying and selling mutual funds online. Digital platforms are also really important for investor education.
Yeah, that's a good point.
And financial literacy.
A lot of these platforms give you access to so much information.
A wealth of information. They really are becoming knowledge hubs. Empowering investors to learn about different strategies. Understand the risks and rewards. And choose investments that align with their goals.
So it's like having a personal financial advisor.
Exactly.
At your fingertips.
At your fingertips.
Now let's shift gears a little bit. And talk about the regulatory landscape.
Sounds good.
The Factbook highlights the crucial role of SEBI,
Right.
That's the Securities and Exchange Board of India.
Yeah.
In shaping the Indian mutual fund industry. So tell me about that.
Well, SEBI is the watchdog.
Okay.
Ensuring that the industry operates fairly,
right,
transparently, and in the best interest of investors.
Yeah.
They set the rules.
Okay.
They monitor compliance. And they take action.
Yeah.
When necessary to protect investors and maintain the integrity of the market.
It's good to know that there's a regulatory body looking out for us.
Definitely.
What are some of the key measures that SEBI has taken?
Well, they've implemented a comprehensive risk management framework for mutual funds, which helps mitigate risk, safeguard investor money, and ensure prudent investment practices.
So they set clear rules.
They do.
And make sure that everybody's playing by the book.
Exactly.
Okay.
And they also prioritize transparency.
Okay.
They mandate standardized disclosures.
Okay.
So mutual funds have to be upfront about their strategies, their fees, their expenses, and their risk profiles.
So there's no hidden costs or surprises?
No.
Okay, good.
And SEBI also mandates regular disclosures.
Okay.
Things like monthly portfolio updates.
Okay.
And daily NAVs.
Gotcha.
So investors always have access to up-to-date information.
So it's all about keeping investors in the loop.
It is.
And empowering them to make those informed decisions.
Exactly.
And the Factbook notes that India's disclosure norms for mutual funds are among the best in the world.
They are.
Wow.
It's a testament to SEBI's commitment to protecting investors and maintaining that market integrity.
Now let's zoom in
on
a topic that can often be confusing for people. Direct plans versus regular plans.
Right.
Can you explain the difference between these two options?
Sure. Direct plans and regular plans are basically the same. Mutual fund schemes. But they differ in how they are purchased. And in the fees. With direct plans, you invest directly. With the mutual fund company. So you bypass the distributors or advisors.
Right.
This eliminates the distribution fees. Or commissions.
Yeah.
That are usually charged in the regular plans.
Okay.
Which results in lower expense ratios and potentially higher returns.
So it's a more cost-effective approach.
Yes.
You're cutting out the middleman.
Exactly.
Keeping more of your investment gains.
Right.
But the Factbook also points out that regular plans still hold the majority share, particularly with retail investors.
Yeah.
So it seems like a lot of people still value the guidance and advice of a financial advisor.
Right.
Even if it means paying a little more in fees.
It's all about finding the right balance.
Yeah.
Between cost and personalized service. You know, some investors are comfortable managing their investments on their own.
Right.
And they really like the control and the cost savings of those direct plans.
Yeah.
But others
really
prefer that peace of mind and expert guidance.
Right.
That comes with regular plans.
Yeah, so it's about choosing what's right for you.
It is.
Your individual needs.
Yeah.
And your preferences. Yeah, it really is about finding that balance that works best for you. But regardless of what plan you choose, it's pretty clear that people are staying invested for longer. The Factbook actually has a section called Investor Behavior, Patience and Discipline. And that seems to be a big shift from how things used to be. Is this just about writing out market volatility, or is there more to it?
I think it definitely shows a maturing market.
Okay.
Investors are starting to really understand that market ups and downs are normal. It's just part of how things work.
Yeah.
They're not panicking at the first sign of a dip.
Right.
And all this patience is leading to better results.
Okay.
The Factbook shows that the share of assets under management with a holding period of over 5 years has more than doubled between 2019 and 2024.
Wow.
Yeah.
That is a big increase. So instead of trying to time the market, it seems like investors are adopting more of a buy and hold strategy.
Right.
Just riding out the waves and focusing on the long term.
Exactly.
Do you think SIPs are playing a role in this?
I think they're definitely part of it.
Okay.
When you commit to a regular investment plan like that, it becomes less about chasing the quick gains.
Right.
And more about that steady, long-term wealth building.
Yeah.
Consistency and discipline win out.
Right.
Rather than reacting to every market swing.
So it's like putting your investments on autopilot.
It is.
They just keep going.
Yeah.
Even when the market gets a little bumpy.
Exactly.
Now I want to talk about another interesting demographic that's highlighted in this Factbook. Women investors.
Yes.
The growth of women investors in India is really remarkable.
It is.
So tell me about that.
More and more women are taking charge of their financial lives and making their own investment decisions.
Right.
The Factbook shows that the AUM from women investors has more than doubled in the past 5 years.
Wow.
Yeah.
That's huge.
It's not just the number of women investors that's increasing,
right,
but also the amount that they're investing.
Right.
The average folio size for women is growing faster than for men.
So what does that tell you?
To me, it means that women are not just dabbling.
Yeah.
They're not just dipping their toes in the water.
Right.
They're making serious investments.
Yeah.
And they're comfortable taking calculated risks.
That's great.
Yeah, they're serious about building their wealth and securing their financial futures.
It's really powerful.
It is.
To see the growing financial independence of women in India.
It is.
And the Factbook actually tells us that 1 out of every 4 unique investors is a woman.
Yeah.
What impact do you think this is going to have on the Indian mutual fund industry?
Well, it's already having a huge impact.
Okay.
Mutual fund companies are seeing this, and they're starting to offer products and services specifically for women.
So they're catering to their needs.
Right.
And their preferences.
Exactly.
Okay.
We're seeing a bigger push for financial literacy programs for women and investment products that address their specific goals.
So creating a much more inclusive investment landscape.
Yeah, exactly.
That reflects the changing demographics of India.
Definitely.
Now, the Factbook also highlights the geographic expansion of mutual fund investments beyond those traditional hubs.
Yes, we're seeing the AUM share of cities beyond the top 15 steadily increasing.
Interesting.
Showing that investors in smaller towns and cities across India are getting more involved.
This is another big shift.
It is.
Because we always think of this as an urban thing.
Right.
What's driving this expansion?
Well, one key factor is those digital platforms again.
Yeah.
With the internet reaching those remote areas, investors in smaller towns have access to information and research.
Yeah.
And they can invest online.
Right.
They can explore all their options, compare those fees, and make investments from home.
Right, from their homes.
Or the office.
So technology is really breaking down those geographical barriers.
It is.
And making it easier for people outside of those major cities to participate.
Exactly.
And it's also coupled with a growing awareness of mutual funds as a good option.
Right.
So we've got financial literacy initiatives led by the government and the industry, educating people in those smaller towns about the benefits. So knowledge and access are really driving this.
They are.
Yeah.
They really are.
That's great. Now, the Factbook also mentions a declining AUM share in the top 5 states. Maharashtra, New Delhi, Karnataka, Gujarat, and West Bengal.
Right.
Is this just those markets getting saturated?
I don't think it's about saturation.
Okay.
I think it's more about this trend of diversification and expansion that we've been talking about.
Right.
As awareness spreads and people have better access to investment opportunities.
Yeah.
We're seeing investors in other states becoming more active.
Right. So in a more geographically diverse.
Exactly.
Ways geographically diverse.
A geographically diverse investor base.
Okay.
Creates a more balanced and resilient ecosystem.
Right.
It reduces our reliance on just a few markets.
Right.
And it helps to soften the blow when there are regional economic fluctuations.
That makes a lot of sense. Now the Factbook has this whole section on digitalization.
Right.
They call it a game changer.
Yeah. And the numbers really show why.
Yeah. Tell me about those numbers.
Nearly 90% of mutual fund purchases in 2024 were done digitally.
Wow.
That shows a massive shift in how investors are interacting with the market.
It seems like digital platforms are becoming the preferred way to invest.
It does.
What's driving that?
Well, it's partly because of the increasing use of smartphones and the internet across India.
Right.
More and more people have access now than ever before.
Yeah.
And they're using their phones to manage their finances, including their investments.
So convenience and accessibility are really key.
They are.
Yeah.
Digital platforms let people transact whenever and wherever they want.
Yeah.
They don't need to go to a physical branch anymore.
Right.
Or deal with all the paperwork.
Right. And it's not just more convenient. It can also be cheaper than traditional channels.
Digital platforms usually have lower operating costs.
Right.
So they can charge investors lower fees.
Yeah.
And that makes a big difference over time.
So lower costs, potentially higher returns.
Exactly.
More convenient.
Yeah, it's a win-win.
It is.
For investors.
So no wonder it's transforming the landscape.
It is. It's shaping the future of the industry.
Right. And it's not just about buying and selling mutual funds online.
Yeah.
It's also about education.
Yeah, digital platforms are so important for that.
Yeah. A lot of these platforms offer a wealth of information.
They do.
And resources. And tools to help investors make informed decisions.
They're becoming like knowledge hubs.
Yeah.
Empowering those investors to learn about different strategies, understand the risks and rewards, and choose investments that align with their goals.
So it's like having a financial advisor in your pocket.
It is.
Right at your fingertips.
At your fingertip.
Now let's talk about another important piece of the puzzle.
Okay.
The regulatory landscape.
Oh, sounds good.
The Factbook highlights the role of SEBI.
Right.
That's the Securities and Exchange Board of India.
Yeah.
In shaping the industry. So tell me about that.
Well, they're the watchdog.
Okay.
Making sure that the industry is playing fair, that they're being transparent.
Right.
And that they're operating in the best interests of the investors.
Yeah.
They set the rules. They keep an eye on everyone to make sure they're following the rules.
Right.
And they step in when needed.
Yeah.
To protect investors. And to maintain the integrity of the market.
It's good to know.
It is.
That there's a regulatory body that's looking out for investors.
Definitely.
So what are some of the things that SEBI has done?
One big thing is they've implemented a comprehensive risk management framework for mutual funds. This helps to reduce risk.
Yeah.
And it safeguards investor money. And it makes sure that investment practices are prudent.
So they're setting clear guidelines.
They are.
And making sure that everybody's following them.
Exactly.
Okay, good.
They also really care about transparency.
Okay.
They require standardized disclosures.
Okay.
So these mutual funds have to be totally upfront about their strategies, their fees and expenses, and risk profiles.
So no hidden surprises or anything?
No.
Good.
They also require regular disclosures.
Okay.
Things like monthly portfolio updates.
Okay.
And daily net asset values.
Okay.
So investors can always see what's going on.
Okay.
They always have the latest information.
So they try to keep investors informed.
They do.
And make sure they can make good decisions.
Exactly.
And the Factbook says that India's disclosure norms are some of the best in the world.
They are.
Wow.
Yeah, it really shows SEBI's dedication to protecting investors.
Okay.
And to keeping the market fair and transparent.
Now, the Factbook also highlights the role of the government.
Okay.
In promoting financial inclusion and making mutual funds accessible to more people.
Yeah, the government has launched several initiatives aimed at increasing financial literacy and making investment opportunities available to everyone.
So tell me about those initiatives.
Well, they have these programs to teach people about the benefits of investing. They're trying to simplify the process. And they're providing incentives for people who are investing for the first time.
So a real team effort.
It is.
Between the government and the industry to make the system more inclusive.
Yes.
Okay, that's great.
And these initiatives are working.
Okay.
We're seeing a lot more first-time investors now.
Yeah.
Especially from smaller towns and cities.
Right.
It's because of these government programs.
Okay.
And the fact that digital platforms are making it so much easier for people to access these opportunities.
So it's about democratizing those financial opportunities and empowering people all over India to build a better future for themselves.
Exactly.
Now, the Factbook also talks about these different mutual fund plans.
Right.
The direct plans and regular plans.
Yeah.
Can you explain the key differences between the two?
Sure. Direct plans and regular plans are essentially the same schemes.
Okay.
But the way you buy them.
Okay.
And the fees involved are different.
Okay.
With direct plans, you invest directly.
Right.
With the mutual fund company. So you're cutting out the middleman, the distributors and the advisors.
Right.
And that means there's no distribution fees.
Okay.
Or commissions.
Right.
Which means your expense ratios are lower.
Okay.
And you could potentially see higher returns.
So a more cost-effective option.
It is.
Cutting out the middleman.
Right.
Keeping more of your profits.
Exactly.
But the Factbook also says that regular plans are still the majority.
They are.
Especially for retail investors.
Right.
So it seems like a lot of people still want that guidance.
Yeah, they do.
From a financial advisor.
Right.
Even though it might cost a bit more.
Yeah.
In fees.
It's all about finding that balance, right, between cost and personalized service.
Right. So some people are comfortable managing their own investments, And they like that control.
Yeah.
And they like saving money with those direct plans.
Right.
But others really value the expert advice.
They do.
And that peace of mind.
Right.
That comes with the regular plans.
Yeah. Right.
So it's a personal choice.
It is.
It depends on your needs and preferences.
Right.
Now, another interesting trend that I noticed in the Factbook is the increasing interest in passive investing.
Right.
Especially index funds and ETFs.
Yes.
So what is passive investing?
Well, passive investing is getting more popular.
Okay.
Because investors are really starting to like this low-cost, transparent, and efficient approach.
Okay.
So passive funds basically try to match the performance of a specific market index.
Okay. So an example would be...
something like the Nifty 50.
Okay.
Or the Sensex.
Okay.
Rather than trying to outperform it.
So instead of trying to beat the market,
right,
they're just trying to keep pace.
Exactly.
And what are the advantages of that?
Well, one of the biggest advantages is the lower costs.
Okay.
Because you don't have to worry about actively picking stocks or trading so much. The expense ratios are usually much lower compared to actively managed funds.
So lower cost could mean higher returns for the investors.
Exactly.
Over the long run.
Another advantage is the transparency.
Okay.
Because it's tracking a specific index. Investors know exactly what they're getting into.
Right.
There's no mystery.
It's very clear, straightforward, and transparent.
Exactly.
So what types of investors would be interested in passive funds?
Well, they can be good for a lot of people.
Okay.
Especially people who want a low-cost, efficient, and diversified way to invest. So they can be great for beginners who are just getting started.
Right.
Or even for experienced investors who want to simplify things.
Yeah.
Or maybe reduce those costs.
Okay. And the Factbook also mentions that direct plans are becoming increasingly popular.
Yeah, they are.
Within this category.
Right.
So the investors who like to manage their own investment, they're opting for those direct plans.
They are.
For their passive funds.
Right.
Which reduces their costs even more.
Exactly.
So it's a double win.
It is.
For those cost-conscious investors. Now, another interesting trend that the Factbook points out is the growing interest of younger investors in mutual funds.
We're definitely seeing that.
Okay.
You know, millennials and Gen Z are much more financially savvy.
Yeah.
And they're starting to invest much earlier in their lives.
Yeah, I've noticed that.
Yeah, they're really comfortable with technology, so they're embracing those digital platforms for their investments.
What do you think is driving this trend?
Well, I think they're more aware of the importance of investing early.
Okay.
They understand the power of compound interest.
Right.
They realize that starting early can make a big difference over the long term. They're also more aware of the challenges of saving for retirement, you know, especially with all the changes in the economy.
Yeah, things are a lot different than they were for previous generations.
They are.
So it's about taking control of your financial future.
Exactly.
Planning for the long term.
And these user-friendly digital platforms make it easier than ever.
Yeah.
Especially for these younger folks.
Right.
Who are so comfortable with technology.
Yeah, that's how they interact with the world.
Right. They prefer those digital interactions.
So these platforms are meeting them where they are.
They are.
Yeah, and giving them what they need to make good decisions.
Exactly.
This is a positive sign for the future of the industry.
It is.
Right.
This growing interest from younger investors, it shows that there are going to be more and more people who are committed to building long-term wealth.
Yeah, and that bodes well for the continued growth.
It does.
Of the industry. Now, the Factbook also gives us some insights into how investor behavior is evolving in India. It seems like people are becoming more disciplined.
Yeah.
And patient.
Yeah, we are seeing people moving away from that short-term, speculative mindset towards a more disciplined, long-term approach.
Right.
You know, they're holding on to their investments longer.
Yeah.
And they're weathering the storms better.
They're not panicking and selling off when the market dips.
Yeah.
They understand that fluctuations are normal.
Right.
And the data shows this too.
It does.
The Factbook says that the assets under management with a holding period of over 5 years has more than doubled between 2019 and 2024.
It's a huge increase.
Yeah.
It is.
It is.
Yeah.
So what do you think is driving this shift in behavior?
Well, I think the SFPs are playing a role.
Okay.
When you've got that regular investment plan.
Yeah.
you're less likely to freak out when the market dips.
Yeah.
SOPs encourage that long-term outlook, and they help investors ride out the volatility, through rupee cost averaging.
So it's like that autopilot again.
It is.
It just keeps going no matter what's happening.
Exactly.
And over time, investors are starting to see the benefits of just staying invested.
Right.
And they get more comfortable with those ups and downs.
They do.
And they don't make those impulsive decisions. They become wiser investors over time.
They do.
Yeah.
It really is a learning process.
Right.
And this shift to longer holding periods is good news for the industry.
Okay.
It shows that there's this growing number of investors who are committed to building wealth.
Yeah.
And they want to be part of the Indian growth story.
And that growth story is long-term.
Exactly.
Now, this fact book also highlights something called the distribution network. Can you tell me more about this network?
Sure.
And how it's changing?
Well, the distribution network is really the backbone of the Indian mutual fund industry.
Okay.
It's basically the network of people and organizations that sell and promote mutual fund schemes to potential investors.
Okay.
It includes your more traditional distributors like banks and financial advisors.
Right.
But also includes these newer online platforms and fintech companies.
So we've got both offline and online channels.
Right. Yeah, and that's really important.
Okay.
Because it helps us reach a wider range of investors, in different locations with different backgrounds and different incomes.
So what exactly does this network do?
Well, they play a few key roles.
Okay.
One is investor education.
Okay.
Making people aware of mutual funds. They teach them about different investment strategies and explain the risks and potential returns.
Right.
They also help investors through the KYC process.
What's that?
That's the Know Your Customer process, which is mandatory for investing in mutual funds.
So they act as educators.
And facilitators, helping investors get started.
Exactly.
Okay.
And then once the KYC process is complete, they help them choose the right funds for their needs, based on their goals, their risk tolerance, and their investment time frame.
Right.
And they also help them buy and sell those mutual fund units.
Right.
So it makes it much easier for investors to transact.
Okay, so they really provide a full service throughout that whole journey.
They do.
Okay.
They're really vital to the growth and success of the industry.
Now, the fact book also talks about the role of technology in the distribution of mutual funds.
Yeah.
How has that changed things?
Well, those digital platforms are completely changing the way mutual funds are sold and distributed. Those online platforms and fintech companies are becoming really important players.
Because they offer investors a more convenient, cost-effective, and accessible where to invest.
So what are some of the advantages?
Well, first of all, it's much more convenient.
Okay.
You can access information, research funds, and make transactions online.
Right. Whenever you want, wherever you are.
Exactly.
Okay. So it's all about that seamless, user-friendly experience.
It is.
Okay.
And it can also be a lot cheaper. Those platforms have lower operating costs.
Right.
So they can charge lower fees.
Right. Yeah. Lower fees for investors is definitely a good thing.
It is.
It seems like the Indian mutual fund industry is really transforming.
It really is.
It's becoming much more inclusive.
Yeah.
But let's zoom in a little bit on the specific types of funds that are attracting investors. This fact book breaks things down into different categories.
It does.
Equity funds, debt funds, hybrid funds. It can be really overwhelming.
It can.
So where should our listener even begin? Right.
How do they know what's right for them?
Well, it's true. There are a lot of options.
Okay.
But that's also the great thing about mutual funds.
Okay.
There's something out there.
Yeah.
For just about everyone.
Okay.
Whatever your goal is, whatever your risk tolerance is.
Okay. So let's break it down a little bit. First, you've got your equity funds.
Right.
Which invest mostly in stocks. So they have the potential for higher returns.
Yes.
But they also have more risk.
Right.
So those would be good.
Yeah. For somebody with a longer investment horizon.
Okay.
Like 5 years or more. And someone who's comfortable with those market fluctuations.
So you got to have a strong stomach.
Yeah. You can't panic when the market dips.
You're in it for the long haul.
Exactly.
Okay.
And then you have your debt funds.
Okay.
Which invest in fixed income securities like bonds. These are generally less volatile than equity funds. Yeah. So they offer more stable returns. Right, but usually lower.
Right. So these are better for someone with a shorter time horizon, maybe a couple of years, and people with lower risk appetites.
Okay, so these debt funds are more about preserving your money, generating a little bit of income.
Yes.
But not so much about that really aggressive growth.
Not so much.
Okay, now what about the people who want a little bit of both?
Right.
They want some growth potential, but maybe not all the risk of an equity fund.
Okay, well, that's where hybrid funds come in.
Okay.
They invest in a mix of both.
Okay.
Equity and debt instruments. They're trying to find that balance between growth and stability.
Okay, so it's about finding that sweet spot.
Exactly.
Between risk and reward.
Yeah.
Now, this fact book also mentions something called solution-oriented funds. What are those?
Well, these funds are designed with specific financial goals in mind.
Okay.
You know, maybe retirement planning or saving for your child's education. They usually have a lock-in period.
What does that mean?
It means you can't touch the money.
Okay.
For a set amount of time.
Gotcha.
And they invest across different asset classes.
Okay.
Based on your time horizon and the specific goal that you're working towards.
Okay, so it's like a targeted investment plan.
It is.
Just for your needs.
Exactly.
Okay. Now, we've talked a lot about SCPs.
Right.
Or systematic investment plans. The fact book really highlights their popularity in India.
They are popular.
So why is that? And should our listener be thinking about them?
They're great for new investors.
Okay.
Or people who just want a simpler approach.
Okay.
Because you're basically investing a set amount of money regularly.
Okay.
Usually every month.
So you're not trying to time the market or anything? You're just consistently investing?
Yes. A disciplined approach.
Okay. Now, earlier you mentioned rupee cost averaging. Can you remind us what that is?
Sure.
And why it's good for SIP investors?
Well, because you're investing that same amount regularly.
Right.
You end up buying more units when the market's down and fewer when it's up.
Right.
So it averages out your purchase price over time, which means you're less affected by those market swings.
So that's a smart strategy.
It is.
For dealing with that volatility. We've talked about so many fascinating things today.
We have.
So many trends that are shaping the future of mutual funds in India.
It is an exciting time.
It is.
To be an investor in India.
It is. So for our listener, what are the key takeaways here?
Yeah.
What should they remember as they explore all of their options?
I think it's clear that the Indian mutual fund industry is doing great.
Yeah.
There are so many options out there. So I think the first thing our listeners should do is figure out their goals. What are they saving for?
Yeah.
When are they going to need that money?
Right.
Once they know that, then they can start looking at the different funds, taking into account their risk tolerance and investment time horizon.
So aligning their investments
with
their own personal goals.
Right.
So,
and don't forget, there are resources out there to help you figure this out.
Yeah.
You know, don't be afraid to talk to a financial advisor if you need help.
Right.
They can give you personalized guidance and help you create a plan that works for you.
That's great advice. Well, thank you so much for joining us today for this deep dive into the world of Indian mutual funds. And for you listening, we'd love to hear from you. What surprised you? What questions do you still have? Let us know. We hope this has given you the information you need to confidently start your own investment journey. Thanks for tuning in, and stay tuned for more insightful deep dives in the future.